Hedge funds, institutions, big banks, these are the guys that move the market. These guys open multiple $1,000,000 positions on various Forex pairs. In this video, I'll be showing you exactly how you can see what position these big guys are taking on any Forex pair of your choosing, so that you can use this in confluence with your technical analysis and take your trading to the next level. What is going on, guys? Welcome to the video. I hope you're having a great day. Not a lot of Forex YouTubers talk about this, but this is almost crucial, especially if you're a swing trader. Now, if you trade on the 15-minute, 30-minute time frame, this might not help you that much. But if you're a swing trader, someone who holds their trades for 1 to 3 days or even a week or 2 weeks, this will help you tremendously. This will take your trading to the next level. So the COT stands for Commitment of Traders, and what this is a report that comes out every single Tuesday that tells us what position hedge funds, institutions, banks are taking on every single Forex pair. Now, these companies have to report their positions. They have to. So this is all very accurate information. So reading this report helps us stay on their side. You don't want to trade against these hedge funds and institutions. You want to trade with them. These guys are the market makers. They're the most profitable. And if you're on their side, you're going to be way better off in your trading career. So I'm going to hop on the computer right now and I'm going to show you exactly how you can read this report and incorporate it into your trading. All right, so to find the COT report, all you got to do is type this in on Google and click on the first link. So scroll down to Chicago Mercantile Exchange and click on short format. You're going to be presented with this. I'm going to zoom in for you guys. So this might look like a lot at first, but I'm going to make it really simple for you guys. All you have to look at is this commercial section, which is all of the hedge funds and institutions. So just this section right here. All you need to look at is these two numbers and these two numbers. So really simple. You can ignore the rest of the numbers. So in order to find a certain pair, you just click Control F and you type in AUD, for example, and then it'll bring you to the Australian dollar here. But before I get into this, I have to make sure you guys understand a very important fundamental concept, okay? AUD JPY. What does this actually mean fundamentally? This is pretty much saying what is the price of AUD if it was converted into JPY. So if JPY is very, very strong, we'll just add a plus there, and AUD is very weak, price is gonna go down. Now, if it was the opposite and AUD was very strong and JPY was very weak, price will be bullish. These numbers right here, this is what AUD is worth compared to JPY. And of course, if they're both kind of neutral, they're both holding their value, then price is just gonna range. Now we can take a look at the COT report. Again, all we have to look at is the commercial section. This is the hedge funds and institutions. These are the guys that we really care about here. Now this is a report as of the 1st of December. And as you can see, there are 51,000 longs and 56,000 shorts. So yes, there are more shorts than longs, but not by very much. So I would say that AUD is kind of neutral. It's holding its value. Currently, it is the 10th of December. So you might be wondering, okay, this came out 10 days ago. Why can I still use this data today? These positions are very, very large positions. Each one of these positions are millions and millions of dollars, okay? In Forex, for every buyer, there has to be a seller, okay? So for us retail traders, we're not opening big positions at all. We're opening, $100, $300, $1,000 positions, right? So we can open and close trades as much as we please whenever we want. But these big banks, they're opening up, multi-million-dollar positions. And in order for them to just close their position and open a new position worth millions of dollars, they need liquidity. There just isn't enough liquidity in the market for them to do that. So these reports are valid for at least 2 weeks. Because again, each one of these positions are millions of dollars, okay? You have to understand that. There's a reason these are the guys that move the markets, because they put the most amount of money into the market. So as you can see, AUD is holding its value. It's not necessarily bullish. It's not necessarily bearish, according to this report. So let's go on to JPY. And as you can see, there are a lot more shorts than there are longs. 153,000 shorts, 90,000 longs. Also, since the last report on November 24th, hedge funds have added 5,000 short positions and closed 3,400 long positions. This tells us right here that JPY is very weak. JPY is bearish. There's a lot more short positions than long positions, and since the last report, short positions were added and long positions were closed. So this is telling us that JPY is weak. Now, what did we say here? If AUD is holding its value and JPY is weak, then price is going to go up. So now if we look at the chart right here, since December 1st, right? December 1st is right around here. So if we looked at this report on December 1st and we were right here on the chart, we would say, okay, I'm going to look for buys. What ended up happening? We had this nice resistance here. Price broke through, came back down to retest this resistance as support, and bam, price went bullish. This would have been a great buy, and you use this the COT report as extra confluence. And this actually went up, over 200 pips. So that is the power of trading with the hedge fund. We can do another example. I'll do another example on AUD NZD. Again, if AUD is holding its value and it's strong and NZD is weak, then price is going to go up. If AUD is weak and NZD is strong, then price is going to go down. Okay, that's really all you have to remember. This is the same thing for every single pair. So let's look at our COT report. We already looked at AUD. We already said that AUD is holding its value. It's neutral. It's pretty strong. It's not bullish or bearish. So we will just look at NZD, the New Zealand dollar. As we can see, there's almost double the amount of short positions than long positions. And since the last report, hedge funds have added 550 short positions and closed 421 long positions. So what does this mean for the New Zealand dollar? It's a bearish sentiment. The New Zealand dollar is weak right now. And what did we say? If AUD is strong and NZD is weak, then price is going to go up. So December 1st is right here in this area. So if we read this report on December 1st and we were at the chart at this time, we would be right here. Now, you don't necessarily want to take a trade solely based on this report, right? You want to use it with extra confluence with your technical analysis, okay? It's just extra confirmation. So here, the technical analysis was, okay, if I break this resistance zone, and we came back to retest as support, I will take a long position. And it was in confluence with the report that this pair was going to be bullish. Same thing with here. I would not take a buy right away right here, right? I would wait for this level of resistance to be broken, which it did here, and then I'd wait for a retest as it gave us in this area. And then I would take my long position. And bam, this is over 100 pips again. So that's pretty much it. It's very simple, guys. You mark up your technical analysis and you come to the COT report and you see if it's in confluence with your technical analysis. If it is, you're most likely going to win your trade. Again, this is for swing traders, people that hold their positions for multiple days. These moves, you would have had to hold them for about 3 days. This move right here, you would have had to hold it for about 3 days. This is targeted towards swing traders, and I think this is the most consistent way to trade. It's the most profitable for me. I personally swing trade. So that is going to wrap it up for this video. I hope you guys enjoyed and learned something new. If you didn't fully grasp the concept of the contents within this video, there are a couple other videos on YouTube. Don't be intimidated by these numbers in this report. You will get the hang of it with practice. I'm going to be posting a lot of free educational videos, so subscribe if you want to see more. like the video and comment if you have any questions. You know, this is still a small channel, so I'll answer every single one of your questions. And yeah, I'll see you in the next video.